It's as easy as that, I'm sure, Arthur. Well, I'll keep it brief, ladies and gentlemen. I'm aware that some of you may have other arrangements to attend to. So I'm not going to go through all the individual panellists. I'm sure you can read in the conference agenda about their experience. I'm also aware that there's been a few sessions preceding this, and some of the material that was on the agenda for discussion in this session has probably already been covered. So I think what I'm going to do is I'm going to try and go through it, and we can have a session at the end for questions, and we can try and mop up any issues. So I'm just going to start off with just a few, go through the questions and start with some of my questions, which we can build on. So I'm going to start with Vasily down at the end here. I'm going to talk about exploration spending in Russia and the CIS. And he's going to have a few words on what's been happening there recently, and we can comment on the outlook. Vasily?
I'm not going to bother you with a lot of numbers, but I think it's not really a surprise that exploration has been declining over the last couple of years globally. And with regards to what's happening in Russia with all the sanctions, I think we, based on the numbers for 2014, we already saw the drop of about like 25%, which is kind of in the line with the global drop on exploration spending. But if we're looking at Kazakhstan, Kazakhstan's drop only about like 6%. And Kazakhstan has been mentioned quite a few times today, and to be honest, over the last few months, when I've been talking to my clients, or my colleagues have been talking to our clients who are different companies, from private equity funds to mining companies, more and more companies have interest and belief in Kazakhstan and Kazakhstan as a future of mining in how do you call it, Eurasian area. So yeah, obviously, as was mentioned by Jeremy Russell this morning, companies are not really happy with investments in Russia. They're not ready to look at Russia, although they understand that Russia has a very, very great potential, but probably wouldn't be able to go there. And in regards to exploration, again, exploration has been an issue in quite a few companies, and we know that investing in exploration today will give a future for the mining industry at some point. And if we're looking at Russia and Kazakhstan again, obviously exploration is happening there, but companies are investing into progressing and developing their existing mines. There's no green project exploration is happening. And again, this might be a problem in the future because Russia, the same as Kazakhstan, has been relying on resources which were calculated by like times with like USSR, and these resources are running out. So governments need to spend more money and pay more attention to early exploration projects and spend for it. As we can see that Kazakhstan is on the right track. Whether it's happening with Russia or not, that's a very, very good question. But for now, I think our clients and our company, as based on our research, we don't think that anything will change in a positive way in regards to Russia over the next couple of years, unless we see something completely different in regards to the situation with Ukraine and Crimea.
Thank you for that. Just a question about, while we're still on Kazakhstan with exploration. What's the current situation with licenses? Would someone in the panel like to comment on Kazakhstan and the licensing? I know there was a moratorium on exploration licenses.
It was lifted some time ago, and now you have to apply to the government first come, first served, but it's a slow process.
Right, very good.
There is no moratorium.
Thank you for that. So there's no impediment in terms of the licensing from the government?
It's still a slow process. We received the license in August, for which we applied 3 years ago, and moratorium was in place.
Right, okay.
But it looks like coming up. But we have to allow at least 12 months.
Very good, thank you. Okay, well, moving on. What other opportunities can we see in Russia and the CIS? If I could put that question out to the panel, that we've seen this background of uncertainty. Do we think that it will lead to more mergers and acquisitions in Russia and the CIS, or low valuations? Can we see that there's a potential opportunity out of this sort of situation of sort of stalled investment that we're seeing due to the political situation?
Well, I'll take a swing at it. I want to just sort of add to Vasily's comments as well, that when you're looking at the effect of sanctions and the opportunities it both destroys and creates, you can color it by looking at what it does to the underlying economics of the situation. So very much what we're seeing is that long money that you might see from major miners coming in that would be expected to stay for the long haul and develop assets is going to be shy for reputational risk, for becoming a target for political retaliation or something like that. We're still not seeing that much activity in the junior miners, and I would suggest that the open query for interested investors that we've heard from juniors at this conference is typical of the sector. There's not a lot of money flooding in. Where at the same time, there are obviously very attractive projects and there is a lot of potential. And I think what we're likely to see is the sanctions will raise the cost of capital. It will become more extensive. There'll be a risk premium that will be applied to people wanting to invest in Russia. And what that does typically is it shortens the amount of time you can see returns for. So I don't know if people were here for I think it was MINEX Central Asia or MINEX Russia last year. Vitaly Nessis from Polymetal. He got up and he spoke about his experience. And he's probably one of the most politically connected and savvy operators that we have in Russia. And he said he's waiting 7 years to get permits and to take greenfield projects forward. And I think that says that in an environment where there's increased cost of capital, that you're not going to see greenfield projects. What you're going to see is perhaps the smart money, the private equity funds, people that are very connected and that can go to the top and get the kind of political cover they need. We'll try and scoop up some of the more attractive projects, and they'll have to be projects that can see a return in perhaps 5 to 7 years. I don't think anyone can sensibly make a long-term commitment to a greenfield asset in the current climate. And that will dictate to a certain extent the structure of the industry in the mid to long term. So that was just my comment. In terms of opportunities that it presents, I think there will be people that have access to funds and that have access to the connections will be able to find very good opportunities in Russia. I think hopefully Kazakhstan will be a different situation. That we've talked about the mining licensing becoming much more open will create a window for people that arrive with expertise, with geological insight, with new technologies, are able to come in and take a marginal resource and perhaps prove it up to something much more interesting. And that will have, I think, collectively a much more enriching effect for the jurisdiction in Kazakhstan if they're able to pull it off. If we go from having a removal of the moratorium and waiting, I don't want to name any names, but there's a very big major miner in Kazakhstan that's still waiting to drill holes after about 3 years. And if we actually see the proof on the ground that what the legislation intention is, I think there'll be a considerable amount of opportunities for all shapes and forms of miners in that part of the world. Thanks.
Thank you.
I just wanted to add on in regards to valuation of projects. I think if we're looking at economics, so obviously like today's currency exchange rate in regards to pounds is like 77 rubles, or it was like on Friday, and in the beginning of the year it was 45 rubles per pound. Obviously, if companies would like to invest in Russia, that's a very good time to buy assets in there. But as we discussed previously, I think risks are too high, so it probably wouldn't be very much interesting for Western companies. And in regards to mergers within Russia and Kazakhstan, based on our current clients, the majority of mining in Russia, for example, is represented by big companies, not the small companies. And most of the good projects are already taken. And I think Russian companies themselves, they really looking into diversifying their assets. And I know for a fact that there are quite a few Russian mining companies who are currently looking for projects outside of Russia, like in countries like Africa, for example.
Very good, thank you. Would anyone else like to add to that? Jocelyn, have you got any comments?
Well, I take a slightly contrarian view, actually. That goes back to what I said earlier today, and that is what is the long term? Are we looking at something that is fundamental, or is this just a blip? Because clearly, if you look at Russia versus Kazakhstan, everybody's been pushing Kazakhstan. I mean, Russia is substantially larger as a mining company, much more mature as a jurisdiction. You heard Max Jakob talking about, he went through some of the aspects of that, and I think that's quite correct. So I don't know. I mean, if you're brave, and going back to the currency issue, yes, assets are cheaper, opportunities are there, and what's going on in Ukraine and sanctions is not affecting life on the ground. That's the point. So actually, actually, somebody said to me after I spoke this morning or intervened this morning, would it be useful to know what you're doing? Well, I'll tell you very briefly what we're doing. We're mining antimony. But interestingly, Bryanston, who put a list of commodities in the Far East, left it off the list, which was a bit disappointing, as Russia is actually the second largest antimony producing country on the globe after China. And China is declining, and there is great opportunity. This is just to tell you what's there, and this is just a small sector that probably overlooked. So, it is sometimes the contrarian view is the right view, and the price is right, and the yields are good. And if any of you are interested in what antimony mining is about, I don't have a book, I have a flyer which says it all in a few words. We are continuing to invest, but we need co-investors, people who are brave and see the long term and see the returns that we can make on this kind of investment in a commodity that's much needed and is declining in China in production, and we're sitting right next to the Chinese market. So it's a very, very interesting thing. Don't like what's going on in Ukraine, but I think we can take a long view.
Very good, thank you. I don't know if you've got anything to add to that, Alexander?
Yeah, I would make a quick quiz. Please raise hands who think we'll see in 12 months dollar hitting 900 per ounce. Gold.
I hope not.
But what's that in rubles?
No, it's still US dollars. No, be brave. I mean, nobody believes that. Okay, at least one person. Thank you very much. And what's the contrarian view on that, thinking that we'll see 1400 in 12 months in gold? Another hand. Yeah, that's called uncertainty, okay? The bulk of us doesn't have a clue what gold will be in 12 months, and that's reality. That's lesson number one. Lesson number two is geologists are to be blamed for all this mess. Yeah. Okay, why? Because they never spend time enough to explain to bankers that gold in situ is very different from gold in Swiss bank. Once financiers figured it out, they fled and disappeared from the markets with all the money, even that which was held in a Swiss bank. And lesson number three, sanctions hopefully could do a good job explaining to Russian investors that vagaries of markets are such that one day they love you, next day they disappear. But it's up to you to decide what's the valuation you put on your assets. And in terms of geological capacity and potential and taking long on Russia, I fully believe that Jocelyn made it right, and we yet to see what's going on. And now, luckily, there is the industry in front of us, which is not consolidated. The trouble with this industry is there is not much to consolidate. The assets are not wrapped up, and there are no world-class assets. And people tend to confuse large deposits and world-class deposits. The first person who's going to figure that out is probably start the new golden rush in Russia. And one lesson from the very, very past, guess who earned most money during gold rushes?
The service providers.
That's correct. The sellers of ropes, shovels, and candles. So once it starts, we'll probably see it.
Well, that's why I'm working for a consultancy firm. All right, if we could just change tack slightly. and talk about infrastructure for a moment. I know there's been an initiative in Eurasia for an infrastructure project called the Silk Road Project. And if you Google it, you'll get a number of different things, most of them which aren't this infrastructure project. So anyway, I understand that there's an initiative brought together by governments there that is going to help improve transport infrastructure and hopefully facilitate mining investment in the region. And I'd just like to ask one of our panelists, Rod, just to give us a quick overview of recent developments relating to that.
Okay, well, I also have had to resort to a certain extent to Google and other sources. I mean, we've looked at a lot of infrastructure projects as a company. We've looked at infrastructure projects in Kazakhstan. The new Silk Route is it's really a transport link that's being advocated by China and more for the benefit of Chinese producers of commercial and industrial goods to have a secondary route to reach their principal market. So it's not really being driven by metals and mining, but certainly could have a very positive effect on metals and mining projects. I believe because of the commercial logic behind having a secondary route for Chinese products to reach European markets is strong enough that it probably will get built, and I understand that Kazakhstan is committed to building it on its own initiative and financing it through expected receipts from transit. The sum is about 44 billion, and I think we can look at other capital projects in Kazakhstan, like perhaps those we've seen in transporting oil and gas in rebuilding Astana, and conclude that it probably will be built. It may be built a bit later, and there may be some leakage to rent-seeking activity, but on the whole, it looks promising, and therefore it should be a general benefit to the Kazakh mining sector. We've done a lot of work where a piece of infrastructure will in fact contribute to bringing into being more mining activity, more exploration. Automatically you can expect more activity around the area. It adds to the valuation of any asset because it removes the problem of getting product to market, and certainly we've seen enough projects for bulk materials and commodities in Kazakhstan that just aren't viable because of the bottlenecks, whether it's going to China or to Europe. And even looking at something like a byproduct, we've done a lot of work in sulfur in Kazakhstan. There's a lot of incentive for oil companies to remove it from the territory of Kazakhstan, and there's sometimes simply not enough capacity to deal with that. So it ends up paying quite tremendous fines. So what I would expect we'd see is it will probably take longer to come into being than we would originally predict, and that through careful study of geology and mining exploration spending, we can probably have a higher likelihood of having some winners, of having a project much more viable than it would have otherwise been as just a deposit in the ground without the infrastructure access.
Thank you. I certainly know from my own experience that when we did a feasibility study for a chromite project in Kazakhstan, they were looking at manually handling the concentrates across the border because of the difference in railway gauges. So there's certainly some significant issues if you're looking at bulk commodities moving from Kazakhstan to China with the rail gauges. But I understand, Ali, you've got some recent information on this and can add to this Silk Road project.
Yes, it was mentioned in the President's address, and I said about this road from China to that road connect China and Western Europe. It is viewed as a very significant project for the country because of the past. Yes, it used to be the Silk Road, and for us, for the landlocked country, it will help us to connect basically to investors in other markets in Europe and, of course, very importantly, China.
Okay, thank you. I'm aware that we haven't got a great deal of time left. I just feel I better bring William into the discussion. In terms of economics, we've heard about the impact of sanctions on exchange rates. Do you have any comments you can give us on what these exchange rate issues what their impact is going to be on these mining companies in Russia, on their valuations, on their operating revenues in the sort of the short and medium term?
Sure. I mean, I think it's clear to see if you have strong ruble devaluation, then that's going to provide quite a kicker. And if you look at the prices of be it gold, silver, platinum, palladium, they've all, in spite of gold and silver both having taken a real hit in dollar terms, I think silver's up around 5% year to date, gold up 20-30% year to date in ruble terms. So what we are seeing is, yes, okay, it's a difficult situation, but if we look past the sanctions, which, I mean, incidentally, if we're talking about Doré, they've actually been relatively unimpeding. You know, producers can still mine, sell, export their Doré or finished bullion, so that's not an issue. I think where it's also helping is on debt, and so if producers are carrying ruble-denominated debt, then obviously with the improving revenues in ruble terms, it's actually providing them with a slight kicker in terms of headroom against earnings-based debt covenants. So I think where it's likely to pose a bit of a difficulty is when it comes to debt refinancing. And going back to an earlier question around M&A, I think where we could see some potential is perhaps on situations where you do have short-term debt refinancings for entities that don't have a huge amount of cash flow. You could see those entities with stronger balance sheets coming in, taking out at relatively low valuations those explorers, if it does come to refinancing debt that they simply don't have the firepower to do. I think that presents quite an opportunity, either for domestic operators or for international producers that already have Russia exposure. So, you know, for an overall international operator, I think getting into Russia now is certainly not palatable, but for those that are already involved to expand their footprint, I don't see that there would be much of an issue with that from shareholder perspective. So I think there are areas where things can change, and certainly in terms of the currency effects, it's actually proving a net positive for those entities, because if you look at Norilsk Nickel, for instance, 80 or so % of their costs are ruble denominated. Mm-hmm. So when it comes to translating their overall cost base, the currency effects versus metal prices, and actually PGMs and nickel have been the outlier. They've actually seen an uptick, but even outside of those, the ruble is very much showing through as the beneficial component rather than metal prices falling back.
So it's certainly not all bad, but I mean, obviously it's going to drive inflation is going to be coming behind this at some point, but not for a few years.
Yes, but I mean, if you look, what are the sort of baskets towards inflation for the mining industry? You've got oil as an input cost and oil derivatives, which are, you know, the wholesale oil price has come off. I don't get the impression that has started to impact producers that much yet, but you know, with long-term contracts, it's going to take a while for that to percolate through. But you know, you've got oil coming off, you've got contract renegotiations. All producers are now looking to see where they can thrift on their input costs. So I think over the next 12 months or so, there's probably a lot of room for improvement.
Very good, thank you. I think we're probably running out of time. We should move on to questions. Unless people want to stay, obviously we'll be around after the conference to take further questions. But if I put it out to the floor now, if anyone's got any questions for the panel?
Julia Boyko, thank you. Just to continue the exchange rate topic, would you or William or anybody else on the panel expect 10-year devaluation to match the ruble?
I would just comment that I think it's the correlation between sanctions and the ruble. The valuation is there, but I think they're also all petro currencies. So the increase in the price of oil is going to have a significant carry-on effect as well. I think one of the advantages of the tenge, if you call that, is they've already had a devaluation in recent times, so there's probably a bit more space for them to move in, there'll probably be more FDI coming in because of themselves opening out to investment.
I just wanted to add one thing that might potentially affect the exchange rate. I know that there is an internal initiative in Russia towards foreign equipment, especially in regards to coal industry. That private and public companies are working on the list of equipment, like foreign equipment that they use for production. And I think they are either getting ready for the next wave of sanctions that might potentially, affect the industry as a whole, because Russia itself, we don't really produce much of equipment internally. So most of this equipment is either from the US or from Europe. Or alternatively, so they're either getting ready for this next wave of sanctions, or I don't know, maybe just the Russian government wants to bring up local production of equipment, which I don't think is feasible, because obviously we all know the problems of the industry. So that's my potential comment.
Okay, any further questions? Got one on the back there next.
Thank you very much. Not exactly a question, but a bit of a comment. The word that I've heard most so far this morning is sanctions. It seems to be a bit of a blanket term. Don't touch Russia. Sanctions, sanctions, sanctions. I think if you look a little bit more closely, there's been 5 state-owned banks, I believe, that have been sanctioned. And there's been a number of individuals that have been sanctioned as well, and there have been some technologies that have been sanctioned. And again, getting back to what we're involved with, which is gold mining in Russia, we haven't yet found shale gold that requires hydraulic fracturing in the Arctic. So the term sanctions to us as gold miners inside Russia doesn't necessarily particularly apply. I'm not speaking to the future. There might be other technologies that we use in gold mining that might be sanctioned, but that's not the case at the moment. So again, when you use the term sanctions and just stay away from Russia, I think investors have to be a little bit more intelligent and a little bit more discriminating in terms of what it is you can do and what it is you can't do. The biggest threat for us as a small gold miner in Russia in terms of sanctions aren't any sanctions the EU or the US might impose. After all, it would be very difficult to actually discriminate specifically against, let's say, open pit mining or whatever, or banning certain pump technologies. And these are all sort of fairly basic technologies. The biggest things are going to be on the capital side, which you've already seen international providers of capital just assuming Russia is toxic and are afraid of anything to do with Russia at the moment. And again, this lack of discrimination in terms of this is not oil and gas shale technology that is being sanctioned, this is straightforward mining. And potentially Russian counter-sanctions, which, if you isolate Russia, they could throw a hissy fit and decide perhaps that, let's punish somebody. But there's hardly any foreign direct investment in the Russian mining industry in the first place, so I would discount the risk of that as fairly low. So, message out there, sanctions, yes, but again, probably need to be a little bit more discriminating. In terms of large deposits and foreigners working there have not been sanctioned, we've got an excellent example of MINEX. They're the largest gold mines in the world, or certainly they're most profitable gold mines that account for up to a third of their bottom line, are all in Chukotka, this is blowing up in the Google. These are truly world-class elephant-sized deposits, and there are others out there. MINEX is quite happily working. The biggest effect that they feel, at least from my discussions with them on the sanctions, is coming from their shareholders asking questions. Well, are you in trouble? Should we be discounting the shares? Tell us what's going on. Maybe you should get out of Russia and go to Congo or somewhere. So anyway, just as a comment. Thank you.
Thank you very much, Max. I think that's a very good point about that. It certainly seems to me it is a matter of perception, and that's certainly not a new thing with Russia and the Soviet Union before that. That the perceived differences is deep rooted and it's difficult to get over. Any further comments or questions? Rob?
I just want to qualify your earlier comments. I think also to Jocelyn that it was an impression that there's, with the comments I made that there aren't good projects. I would say almost the contrary. There's not very much room right now for greenfields projects. You're not going to see majors coming in and developing a large project. The sort of sweet spot is there for mid-sized existing projects. If you've got the political risk equation solved, if you can confidently produce and you know that you're not going to lose your asset and your underlying investment, then this is probably a great time to be in Russia. If and again, it's an if, then you're going to have a discount on all the projects that you look at. You're going to have lower costs because of the devaluation. And as you said, there's some very good prospects there. So I think it's a question not just of taking, as any investor would, not just taking a general situation, but making very precise, almost surgical inquiries into the assets or projects you're interested in, and convincing yourself of the viability. It could be a very rich source of returns. But I think you're going to have to look at the situation, particularly for political risk in each and every individual project.
Thanks, Rod. Anyone else? No. Julie's got one.
Me again, thank you. In preparation for this session, very diligent preparation, I was interviewing Eurasian, Russia, Kazakhstan, Kyrgyzstan, Kazakhstan, mining operators. And I asked them a simple question: what is smart mining? How are you being smart now? And what would you recommend to those who are less smart? And one of the answers was pretty blunt: shut down and fire everybody. So, without going into such radical measures, what would panel recommend? And would anybody there producing any forecast as to the future?
So if I could just answer that question firstly about where mines are going with cutting costs and automation, is from what I've seen trends recently in the industry, it's not about automation where you've got robots doing it, or even where you have people in a control room on surface operating equipment by remote, like they do at mines like Kiruna, for example. I think there's a middle step, and in the last year or two there's been more noises made about it. For example, in Bulgaria, the Chelopech mine, Dundee Precious Metals there, they've introduced a program that they called Taking the Lid Off the Mine, and the guys there wrote a technical paper about it. And basically what they did is they're trying to run their mine as if it was a factory. So for example, if you had a plant making cars and there was no paint in the paint shop, the manager of the plant would probably know within 5 or 10 minutes that you can no longer make cars because there's no paint in the factory. Now, if you take that example into mining, you have a situation where a bunch of guys, particularly in underground mines, will go underground and they'll disappear for 8 hours, 10 hours or 12 hours. And they'll be given instructions for that shift, they'll be given some support during the shift, there might be a phone system, there might be a radio system in the mine. But generally, the corrective action by management takes place at the end of the shift, not during the shift. So all the miners report back to their boss and they say, oh, well, I only managed half of what I was planning to do. In underground mining, a lot of the scheduled tasks are not completed for one reason or another, and supervisors don't know about it. So the way that mines like Chelopech and others are dealing with this is they're putting a Wi-Fi network underground. They're putting tracking devices on every single worker. They're putting logging devices on every single piece of equipment, so that somebody can sit in a control room on surface and see exactly what each miner is doing, seeing how long they spend in each part of the mine, seeing the operating status of each piece of equipment. So it's not automation, it's just controlling what you do. And the aim of it is to achieve more scheduled tasks in a given shift. Now we're starting to see this more and more. So one of the first trailblazers was the Chelopech mine in Bulgaria. I know there's a mine in Turkey that's doing it. I know that Barrick in Tanzania, Brad Gordon, their CEO, stood up at Ndaba last year and said that he was going to start doing it for Bulyanhulu. So this whole business of running an underground mine like you run an open pit is something that's beginning to spread. And I understand there's a company in Almaty starting to do it and promote it to some of the large operators there. So you can start small and maybe just monitor where people are as a safety measure. Or you can take it a step further and have each person has a radio or can be contacted them through with this system. You can take a mobile phone underground and you can send your worker a text message. Or they can take a picture of a broken down spare part and send it to the mechanics. So that to me is one of the big changes in productivity we're going to see in the next 10 or 20 years in underground mining. And I think that in whether it's Russia, Kazakhstan, everybody embraces a mobile phone, everyone embraces computer technology. And I think mining has been one of these last bastions of many mines still run the same way as they were 50 years ago in terms of supervision and control. So I don't know if any of the panelists have come across that.
I would like to personally respond to Judith and maybe finish this panel on a positive note. One of the smartest, some people believe, Londoners who lived 100 plus years ago in the city once said that there is no crime a capitalist would not commit for a profit of 400%.
You've met some of my clients then.
No, I mean that's Karl Marx. And in a nutshell, his suggestion means come with a good project which can demonstrate significant return, but not at 5% net present value, but at 15% net present value. You'll find a way to finance it. I'm absolutely sure about that. In Kazakhstan, Russia, or elsewhere.
Well, it's finding that good project's the challenge, isn't it? And that's the thing, margins are getting tighter, metal prices are going down, labour costs are going up, all right, maybe fuel costs we're seeing is coming down, but it's a tough environment, which is why, as I say, some of my clients are heading in this direction of trying to control everything that goes on in their operation every minute, improving the short interval control.
Does that justify the cost?
Well, you think about the cost, that many mining companies think nothing is spending $2 million on one truck, for example, for an underground truck or a jumbo. But on a communication system, for $500,000 you can buy a lot of Wi-Fi cabling and antennas and access points. It's really quite cheap. I mean, I'm only talking about the kind of infrastructure we already have in our offices, perhaps, if you've got a Wi-Fi system. So it's not as if it's particularly groundbreaking technology or difficult.
Sorry, could I just take this? I think talking much to what you were talking about earlier around, you need to sort out the basics. I think what we're going to see now under, it's crazy to say, but $1,000, $1,100 gold, lower gold prices, is going to be about keeping it simple. So what we have seen is, as prices went up, $1,600, $1,800, everything was on the table. Everything was, fair game. Low grades, refractory ores, awkward locations, geopolitically unstable areas. I think it's going to be much more a move back to simple projects. And the problem, as we have been discussing, is that these are thin on the ground now. But what I'm suggesting is that if there is the opportunity to produce basic doré from an oxide deposit, even if it's relatively small, if it's low capex, low risk, then it's still attractive. What is not attractive in this environment where we have low prices, but more importantly a lack of access to capital now, is complex projects, high capex projects. If there's high operational risk, so building, engineering, financing, roasters, new technology, pressure oxidation, back-ox, then that just adds components of risk that right now people don't want to finance. So I think it's going to be about simplicity of ore bodies. Even if it's a relatively smaller ore body, if the grade is good, if the capex is low, then it's attractive. And if it's expensive, then it's probably not going to happen.
Goldcorp did it in the previous downturn. The production cost was $70 per ounce, $280 price environment. And what Goldcorp is now? It's one of the largest miners.
Sure, but
they found a 40-gram ore down below. That was the problem. That was the reason why it was so crap in the cost. So grade is king. Simple.
That 30 to 50 gram a ton gold at Red Lake, that helped them out quite a few projects.
I mentioned them.
I know you discovered it, Alexander. So that's the point.
Any further questions or comments?
No.
No? People are hungry enough? Right, okay. Arthur's itching. Thank you very much, gentlemen. I'll hand you over to Arthur.